Picture this: you're strolling along the Seine in Paris at dusk. The lights twinkle along the riverbanks. You feel calm, hopeful. Yet in that moment, the financial world is quietly creaking, stretched beyond its limits, like an old violin string about to snap. Beneath the gloss of booming markets and glossy headlines, something fundamental is shifting. A once-in-a-lifetime economic reset may be coming, and it might upend the rules you thought were written in stone. If you've ever felt like the game is rigged, like wealth is being pulled farther away from most people, then this story is for you. Because it may not be enough to ride the wave of the markets. We need to understand when a wave crashes. Let's begin with an odd, almost paradoxical twist. Since 2008, the US stock market, and many global markets, have climbed to record highs. Yet real personal incomes, the money people actually take home after inflation, have barely budged. The gap is growing. It's like watching a hot air balloon rise while the ground beneath you stays flat. Sure, the balloon looks majestic, but if you're on the ground, you wonder, when will gravity pull it back down? The S&P 500 and other indexes have surged, enriching asset holders. Meanwhile, real wages, savings, and living standards for many remain stuck. This divergence is not a fluke, it's a signal. It's the tension between asset inflation and real economy stagnation. Let me tell you about Luca, a graphic designer in Milan. He's worked tirelessly, scaling his freelance income gradually. But as real estate in Milan and northern Italy went through the roof, Luca watched in frustration. Houses that cost €200,000 when he was younger now go for €400,000 or more. His wages, though respectable, can't chase that. He sees operators flipping properties, getting capital gains via connections. He wonders, how do I ever catch up? Meanwhile, someone who bought early, maybe inherited, maybe had capital, has gained far more. That's the divergence, wealth from capital versus sand in the gears of labor. To understand an upcoming reset, we need to see the engine behind the divergence. What's driving the asset mania even as regular people strain to get ahead? Corporations, especially large ones, have dramatically expanded their profit margins. They've squeezed costs, wielded global supply chains, optimized tax strategies. As profits climb, valuations rise. So assets get bid up not necessarily because the real economy is booming, but because the financial constructs allow it. In effect, corporate power has become a lever that lifts asset prices, stocks, real estate, disproportionately. At the same time, many households have seen their savings rate decline. Stagnant wages, rising costs, housing, energy, health, leave little margin to save. If you can't save, you can't invest. And if you can't invest, you miss the primary vehicle of wealth creation in this era. The wealthy who already own capital snowball upward, the rest struggle to even get to the game. Governments and central banks have supported asset markets with low interest rates, liquidity injections, credit availability. It's like giving oxygen to a flame. But flames grown by external fuel become fragile, vulnerable to sudden shifts. Debt at household, corporate, and sovereign levels is immense. Leverage amplifies everything, both upside and downside. So you have rich corporations with growing margins, low savings for the majority, leveraged markets, and policy that often supports asset valuations. That's the tinderbox for a reset. We often think this time is different. But history has a stubborn habit of echoing patterns, particularly when extremes get reached. In the late 1920s, you had booming stock markets, immense inequality, cheap credit, financial speculation. Wages did not keep pace. Everyone talked about the new era. Then the crash came and with it, tax revolts, regulatory shifts, and institutional realignment. One big reaction was a jump in corporate taxes and reforms aimed at curbing excess. A reset. That reset was painful, but transformative. What we're seeing now, rich getting richer via capital, the middle squeezed, policies favoring elite asset classes, echoes that earlier montage. The question isn't if something breaks, but how and when. So when people whisper about a shock, it's not alarmism, it's precaution. These are possible flashpoints, like fault lines beneath the surface. They may activate alone or in combination. One potential lever, Governments responding to outrage at inequality by increasing corporate tax rates, perhaps dramatically. That could compress profit margins, shrink valuations, and spark a correction. Imagine a headline: EU introduces sweeping windfall profits tax, or new global minimum tax hits big tech hard. Suddenly, what looked safe is revalued. Monetary tightening, raising rates, cutting asset purchases, could pull the rug. The liquidity that propped up asset valuations could evaporate, causing a cascade. Eventually, the tension between booming asset markets and flat consumer income might snap. When consumer demand falters, companies' earnings suffer. The illusion cracks. Countries with high debt loads may prove vulnerable, especially if their yields rise. A crisis in sovereign credit could spill over into banks, markets, and confidence. Sometimes it's a war, a major policy surprise, a financial institution collapse. These shocks are unpredictable, but they find weak systems and exploit them. Reset doesn't necessarily mean apocalypse. It can be messy, painful, but also recalibrating. Stock markets may correct sharply, 20–40% plus. Residential and commercial real estate could slump. Corporate profits shrink. Labor may regain leverage as capital's dominance falters. Governments may demand more taxation, more regulation. Wealth gaps could compress, sometimes via painful downward pressure. For asset owners, this could be a rude awakening. For people striving to build value without tons of inherited capital, it could be a chance to level the ground. Because knowledge without action is just noise. Let's plan. Don't assume the good times last forever. Markets can defy gravity for a while, but eventually gravity applies. Be wary of complacency. Diversify, especially outside inflated asset classes. Don't be all in tech stocks or real estate. Think real assets, cash cushions, businesses, skills that aren't dependent on valuations. Keep flexibility, liquidity, optionality in your business or side hustles, ability to shift to recession-resilient sectors. Owning assets that generate steady income, dividends, rentals, royalties, is more resilient than purely speculative positions. Emergency funds, low leverage, lower fixed costs, these are your shock absorbers. When markets correct, balance holders might panic. Capitalize, but cautiously. Be ready with ammunition, capital you can deploy. Track macro indicators, margins, debt ratios, consumer credit, yields, policy statements. If you sense cracks, adjust ahead of others. Sophie's small patisserie in Berlin has survived ups and downs. She buys ingredients in bulk, maintains tight margins. She's seen her rent go up, energy prices swinging. In 2024, she diversified, offered classes, wrote a recipe ebook, sold merchandise online. That gave her flexibility when costs spiked. If a reset hits, those multiple income lines are her cushion. Alex commutes on the tube in London, listening to podcasts. He's in marketing, but also runs a small content business. He invests in a mix of stocks, digital products, and some real assets. As whispers of an impending reset grow, he shifts some allocations to cash and bond alternatives. He's not panicking, but he's preparing. Marta in Madrid works in real estate development. She sees demand drying in smaller markets while megacities still surge. She hedges. Instead of overextending in one city, she diversifies regionally. She anticipates a cooldown and positions to buy when valuations correct. These are not heroic tales, they're realistic decisions. Because when the reset comes, the people who act thoughtfully may preserve more and even capture opportunity. Maybe you've heard the phrase generational moment. We tend to reserve it for war, pandemics, tectonic shifts. But financial resets can be just as foundational, redefining how wealth is created, how power flows, how opportunity is distributed. This moment feels unique because several extreme conditions align. Asset valuations are historically high. Inequality is extreme. Debt burdens are massive. Policy support is stretched. Consumer financial health is fragile. Global uncertainty looms. When so many variables lean toward tension, the probability of a structural reset rises. You may not know when or exactly how, but you can sense the current intensity. If you walk away with one shift today, let it be this. You are not powerless because you are not just a passenger in the economy. You can't control markets or policies, but you can control your awareness, your positioning, your habits, your resilience, your decision-making before the storm. Don't wait for chaos to force change. Let the possibility of reset inspire you to build a plan, not fear. Before we close, let me leave you with what to watch because the clues will emerge. Margins of big corporations if they slip, danger ahead. Government pronouncements on taxing windfall profits. Yield curves, credit spreads, sovereign debt stress. Consumer credit defaults rising. Liquidity drying up in markets. Corporate debt rollovers failing. When markets begin to whisper liquidity draining, spreads widening, that's your early alert. I want to end with this. Change is scary, but it is also opportunity. Think of a river that's been dammed and pressured. When the dam breaks, water rushes, but after that, new channels emerge, fresh soil is laid, and new paths form. This economic reset, if it comes, could reshape the terrain. For some it's a storm. For others, it's a clearing to build again. If you listen, prepare, and position deliberately, you won't be just surviving, you can be reborn financially. You don't need to predict every twist. You need awareness, courage, and action. If this voiceover stirred ideas, bookmark it, revisit it, share with someone you care about. And when the reset whispers begin, come back and draw strength. Your future self is waiting not just for survival, but for meaning, independence, and the power to shape your own path.
This journey is built on strategy, consistency, and value. If my content helps you grow financially, there's a PayPal link in the description. It's not about the amount, it's the support that counts. Every bit fuels more value. Let's build wealth together.